Welcome to the Bullvine Podcast, your go-to source for inside stories, cutting-edge research, and the latest updates in the world of dairy farming. In this episode, we share the latest in dairy markets. What do falling butter and cheese prices mean for your business? Gain insights with our expert analysis. So please grab a glass of milk, sit back, and let's get started with this week's Dairy News Roundup.
Have you ever felt you were struggling to keep up with the dairy market's cyclone of changes? It's a feeling shared by many in the business as butter and cheese prices continue to fall precipitously, threatening market stability. This weekly look at the dairy picture is more than simply a news update. It's a toolbox for navigating these tumultuous seas. Staying educated about these changing trends is not just beneficial, it's crucial for dairy farmers and industry experts. It's the key to making strategic choices that may make or break your bottom line. Understanding and keeping ahead of these market factors allows you to take control of your company's success.
As of October 7th, 2024, the dairy market shows a mixed picture. The most significant changes are the ongoing declines in butter and cheese prices on the CME cash markets. Butter futures have dropped by about 0.5%, while cheese futures have fallen even more, losing 2.3%. Despite losses, the powder industry remains resilient, with dry whey and non-fat dry milk remaining stable in both cash and futures markets. This resilience indicates a strong demand for these items, as opposed to a weakening desire for butter and cheese. Monitoring how these patterns play out as we enter the seasonally tighter supply phase in the Northern Hemisphere, a period when milk production typically decreases due to weather conditions, is crucial.
The last global dairy trade GDT auction results indicate a modest 1.2% increase in the overall index. A deeper analysis uncovers interesting trends within various commodities. For instance, cheddar cheese prices jumped 3.8%, implying worldwide solid demand and likely tighter stocks, which might spark more interest from overseas purchasers. In contrast, whole milk powder, WMP, a vital driver of the GDT index, rose 3%, underscoring its critical role in setting market patterns and implying solid demand from major importers, notably North Asia, despite lower demand for other dairy products. Lactose prices increased by 6.7%, suggesting rising demand for this dairy byproduct, potentially from baby formula and healthcare businesses. The complexity of supply chain dynamics, which refers to the various factors that influence the production and distribution of dairy products, is apparent here. Variations in lactose demand may cascade across the market, influencing price tactics for related products. The market's interdependence emphasizes the significance of studying and monitoring all elements of the dairy sector. Such fluctuations in commodity performance underscore the complexities of the global dairy trade. While several variables impact regional pricing sets, these changes are the foundation for a larger story of market variations that match current supply expectations and strategic purchasing patterns. Understanding these microtrends is critical for organizations navigating the market to make educated decisions and prepare for the future. The evidence suggests caution, but also an opportunity for those willing to adapt. A close watch on these events might be the difference between securing an advantageous position and getting swept up in market upheaval. Remember that these swings provide possibilities for development and achievement, inspiring confidence in the face of market uncertainty.
The USDA's new National Dairy Product Pricing Report thoroughly examines current market dynamics, highlighting considerable price increases in key categories. Notably, butter, protein, and Class 3 and 4 milk prices increased significantly in September, above historical averages. For example, the Class 3 price jumped to $23.34 per hundredweight, a significant increase from August numbers, and the Class 4 price also rose, maintaining substantially above its long-term average. These high prices may have severe consequences for dairy farmers. On the one hand, rising butter and protein prices help farmers by increasing revenues, mainly because the protein price now covers the nutritional expenses associated with production. Protein prices are $2.92 per pound, reflecting strong market demand and a return to equilibrium within the historical price range. Meanwhile, the rise in Class 3 and 4 pricing indicates an excellent economic situation for milk producers, which might increase profits in the short term. Such prices have risen beyond their regular range, indicating that farmers may get a welcome break from volatile market circumstances. However, these increases elicit caution. They underline the necessity of strategic planning, as continuous price increases may ultimately shift customer demand and affect manufacturing decisions. This strategic planning can help mitigate risks and provide reassurance in uncertain market conditions. While celebrating these increases, producers should remember that market volatility and seasonal variables may dampen this upward trend. Dairy producers must be watchful and sensitive to altering market signals, as historical data gives context for current market circumstances that highlight both opportunities and risks.
The worldwide dairy market undergoes dynamic movements, mainly driven by regional production patterns. Australian milk output increased slightly in August, reaching 2.9%, with component adjustments rising to 3.0%. This rise in Australian production increases global milk availability, making market players concerned about potential supply surpluses. In addition, cheese and butter prices in the United States and the European Union have fallen. These modifications often reflect regional market circumstances, where increased output or low demand might result in reduced pricing. The US and EU pricing changes suggest a more significant trend of decreased demand or a rebalancing of supply networks after the outbreak. These regional production changes influence the present dairy market dynamics. Australia's growth in milk production might put pressure on world pricing, mainly if other significant producers maintain or boost output levels. Furthermore, persistently low cheese and butter prices in key markets such as the United States and the European Union may indicate cautious buyer behavior, preferring to wait for prospective price corrections. Looking forward, these tendencies indicate a mixed prognosis for future prices. Suppose Australian supply continues rising while the United States and Europe change prices. In that case, the market may face competitive pricing situations. It may provide possibilities for producers who can effectively react to these fluctuations while cautioning against over-reliance on favorable prior price levels. As the global market digests these patterns, stakeholders must remain alert to continuing regional shifts, which provide crucial indications for future choices.
The dairy market is now experiencing negative sentiment, which is surprising considering the Northern Hemisphere's seasonal tightness. While you may expect a seasonal price increase as the year comes to a close, the overall attitude is one of worry. Why the jitters? Increasing milk output will make a substantial contribution. As manufacturers prepare to meet projected demand, additional supply may put downward pressure on pricing. This tendency is pronounced as we approach the year's final quarter, which is traditionally a period of lower milk output. Furthermore, purchasers are playing the waiting game. Their cautious stance arises from the uncertainty surrounding recent price movements. Instead of purchasing, many people choose to sit on their hands, waiting to see whether prices drop any more before entering the market.
In light of the recent drop in butter and cheese prices, many dairy producers are concerned about the impact on their profitability. Historically, these items have contributed considerably to farm earnings, so any price decrease may have an immediate and tangible impact on a farmer's financial health. How can dairy producers navigate these turbulent waters? One of the most serious issues is the effect on income. Lower butter and cheese prices may reduce profit margins, particularly for businesses that rely heavily on these items for revenue. Farmers may want to pursue cost-cutting initiatives to address this issue. This might include anything from increasing feed efficiency to lowering agricultural overhead expenses. Another strategy might be to diversify product offers. Farmers should diversify their portfolios by expanding into value-added goods. For example, making specialized cheeses or concentrating on organic dairy products might help you grab niche markets and fetch premium pricing. Diversification strengthens revenue streams and protects against single-product market instability. Furthermore, evaluating alternate markets is critical. Direct-to-consumer sales via farmers markets or internet platforms might result in a higher price realization than wholesale methods. Furthermore, joining cooperatives may improve market access and negotiating strength during these difficult times. Finally, Although dropping prices pose considerable problems for dairy producers, they also allow them to innovate and adapt. Farmers may limit the adverse effects by implementing strategic strategies and emerge more robust and resilient in the constantly changing dairy market.
In light of the recent drop in butter and cheese prices, many dairy producers are concerned about the impact on their profitability. Historically, these items have contributed considerably to farm earnings, so any price decrease may have an immediate and tangible impact on a farmer's financial health. How can dairy producers navigate these turbulent waters? One of the most serious issues is the effect on income. Lower butter and cheese prices may reduce profit margins, particularly for businesses that rely heavily on these items for revenue. Farmers may want to pursue cost-cutting initiatives to address this issue. This might include anything from increasing feed efficiency to lowering agricultural overhead expenses. Another strategy might be to diversify product offers. Farmers should diversify their portfolios by expanding into value-added goods. For example, making specialized cheeses or concentrating on organic dairy products might help you grab niche markets and fetch premium pricing. Diversification strengthens revenue streams and protects against single-product market instability. Furthermore, evaluating alternate markets is critical. Direct-to-consumer sales via farmers markets or internet platforms might result in a higher price realization than wholesale methods. Furthermore, joining cooperatives may improve market access and negotiating strength during these difficult times. Finally, although dropping prices pose considerable problems for dairy producers, they also allow them to innovate and adapt. Farmers may limit the adverse effects by implementing strategic strategies and emerge more robust and resilient in the constantly changing dairy market.
As we look at the changing environment of the dairy business, it's evident that current trends are creating a complicated picture. With butter and cheese prices plummeting while powder prices remain resilient, dairy producers and industry experts must stay watchful. The minor increase in the global dairy trade index adds layers to this continuing story, with higher prices creating possibilities and calling for strategic prudence. Furthermore, the unexpected relaxation in butter and cheese prices during a traditionally tight season defies conventional wisdom. For dairy producers, these variations are more than just figures on a screen. They are warning signs that need a rethinking of plans and procedures. How will you use these trends to strengthen your company and prepare for future setbacks? With milk supply building up and market sentiment trending toward caution, it is up to you to navigate these unpredictable seas wisely. As you map your route, consider the following. Are you ready to pivot with the market, or will your strategy be anchored in long-held practices? The future may be unclear, but your ability to adapt might decide your success in the coming months.
Thank you for tuning in to the Bullvine Podcast. We hope you enjoyed today's insightful discussion. Don't forget to subscribe, share, and leave a review. Catch you next time on the Bullvine Podcast, where bovine expertise and community come together.